What's up, guys? Welcome back to Mark's Stock Review. Hope you had a great trading week. This video is going to be on the SPAC Ipof. I'm going to go over a very brief overview of the SPAC. I'm going to show you my current positions, 5 reasons why I bought, and then a final take. As per usual, I'll keep the video as brief as possible to respect your time. A thumbs up would be greatly appreciated if you do find it helpful. That said, let's get right into it. Ipof is the 6th and most recent SPAC under Chamath, who's a former Facebook executive and very well known in social media. This SPAC has raised over $1 billion, and it's going to focus on technology in a very broad sense, and many think it might be the biggest deal yet. In addition, Ipof seems to have one of the strongest interests of all the SPACs recently. Shown here is my current position in Ipof. Note that I also have a small position in IPOD. I also included my cost basis for your reference. And here's a few more SPACs that I purchased recently. Any questions, just let me know in the comments section below. Reason number 1 that I bought Ipof is the general market weakness this week, with money rotating out of SPACs, especially those without mergers or merger targets. And I personally see that as a major buying opportunity. Some of the reasons why the market pulled back this week is that they're waiting stimulus news, there's concerns about vaccination rates, and earnings. For example, Apple reported this week and had a blowout quarter. However, the share price still dropped after hours, and to me that just says that the market's ready for a mild pullback as a whole. However, from my point of view, I'm not worried, and as you can see here, the Federal Reserve is also not worried. Reason number 2 is Richard Costello. The last 3 SPACs of Chamath have all had the same management except for one added team member, and with Ipof, it's Richard Costello. Most already know that he was the former CEO of Twitter, but he was also the founder of FeedBurner, which was acquired by Google in 2007. This company was a web feed management service that provided custom RSS feeds and management tools for bloggers, podcasters, and other web-based content publishers. And of course, this is speculation, but it's an indication the merger could be in the social media space, and for me, that's a positive. Moving on to reason number 3, the track record of Chamath. His first SPAC, IPOA, turned into Virgin Galactic. Look at the 52-week range there and see how it's almost doubled in 6 months. His next SPAC, IPOB, turned into Open Door, which is a digital platform for real estate. Some are calling it the Amazon of real estate. It was a $4.8 billion merger and up pretty well since the initial offering price. It's also owned by ARK's FinTech Innovation ETF, number 27, with a 1.6 weight of the entire portfolio. IPOC turned into Clover Health, which provides health insurance services, specifically Medicare Advantage healthcare plans, to 57,000 members. But full disclosure, healthcare is by no means my favorite merger target industry. However, as you can see here, the share price is still doing well since the initial offering price. And lastly, IPOE announced in January they're merging with SoFi, which is a financial service platform. That was an $8.65 billion valuation. The company has 8.1 billion members and generates about $1 billion in annual revenue. And this SPAC has had a huge run, especially the last couple days of this week. Reason number 4 is that the current share price of Ipof is relatively close to the initial offering price. In my opinion, the share price is going to reach at least 17 to 20 when there's a consensus rumor, and then at least 20 to 23 after the merger target is announced. And that's a roughly 40 to 60% return from the current share price. And number 5, Chamath is aware management is the most important factor when seeking a merger target. He has said this on multiple videos and articles that I've read, and that matches my opinion that management continues to be the most underrated factor when evaluating a company. And moving on to my final take, to be fair, this could be his first disappointing SPAC. The share price could slide like VGAC after their merger announcement with 23andMe. I do think that is very unlikely from my point of view. However, I do want to mention that there are risks with SPACs in general, especially those without a merger target. But regarding Ipof, Chamath has said he's in the trenches, and I'm convinced he's going to find another great company to merge with. Chamath's IPOE SPAC, SoFi, really stole the show this week. Another reason why I think Ipof might be temporarily under the radar. And so between that and general market weakness recently, I'm looking to add more shares of Ipof, especially in the range of $13 to $14. And that does it for my video on Ipof. I hope you guys found it helpful. If you did, a thumbs up would be greatly appreciated. Let me know if there's any other SPACs you guys want me to do a video on. Hope you guys have a great rest of your day, and I'll be talking to you soon. Take care.